Welcome to the Property Couch, where each week you get to listen to two of Australia's leading property experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle channel, and Ben Kingsley, chair of Property Investors Council of Australia and the 2014 and 2015 Property Investment Advisors of the Year.
All right, folks, you're on the Property Couch where each week Ben and I bring you the insider's guide to property, finance and money management. Hello, mate.
G'day, mate. How are you?
I'm good. How are you?
And both of our teams lost.
They did?
Can we be good? Well, were you happy with the team's performance?
Yes.
Did you have a chance to win?
Yes.
And what happened?
We lost. Five missed two in the last quarter and we got done by 7.
Right, okay.
So
we
all my West Coast mates, they were pretty happy with that, let's just be honest. So,
fair enough. Our boys put up a good showing for the first 3 quarters and just went missing for the last bit. I mean, 3-day turnaround, a bit tough, but I was proud of them. I went to the game.
Were you there?
Yeah, I was there. Yeah, I went along.
Mate, we'll call you Eddie Maguire. You just bring Collingwood in wherever you can, don't
Oh,
you?
that's all right. I love the boys.
Hey, I've never said this before, Ben.
What's that?
Very special guest today.
Oh. Everyone's a special guest.
Very special guest today, but we've got the king of research in the house.
Yeah, we've got the Capital Growth King.
Jeremy Sheppard. So before we get into the formalities, mate, how are you?
Yeah, I'm well, thanks.
The
Great to be here.
school lads are back together.
Yeah.
Hey, tell us, we get lots of people write in to us and complain that we only talk about AFL and we don't talk about your game. So maybe this is an opportunity for talk about your game. How'd it go on the weekend? Did your team win?
I don't have a team. I used to have a team. It used to be the Maggies, actually, until they joined with West Tigers. And I've been liberated ever since because it was always miserable hearing them lose. So I've made a purposeful decision never to have a team again.
But sitting on the fence, mate.
Yeah, I like watching the games, but I don't want any emotional attachment.
It's all too difficult.
It's too hard, yeah.
So you don't keep half an eye on the Cronulla Sharks to keep...
I do. I like the Warriors this year, but everyone does. Everyone's jumping on the Warriors.
So no, go the Storm. No.
Yeah, I hate the Storm.
Oh,
too successful?
Too successful
Yeah,
for you.
too successful. Yeah, I always go for the underdogs.
So there you go, folks.
So
for those people
NRL.
ready to pen an email to us to stop talking about AFL, we threw NRL in the mix too as well. I don't know anything about
I'm Rabbitohs because I lived in Sydney. I was in Sydney.
Oh, you're a Rabbitohs, are you?
I'm a Rabbitohs.
You talk about Rabbitohs around here all the time. Like,
I've got a team.
Jump on the
I've got a team. My
bandwagon.
team's not Melbourne. I lived in Sydney and Rabbitohs.
Aren't they the Bondi team? No, that's South Sydney, aren't they?
South Sydney,
Bondi.
where I lived. Yeah, I used to train across the road from where I lived.
What's the Bondi team? The blue team.
Well, you'd have to say it's the Roosters.
Roosters, that's
Eastern
it.
suburbs. Yeah.
It's like Hawthorn.
Right, there we go. For all that, we got a lot of Hawthorn. Good fun. All right, we're moving on. We're getting the wind up.
I was just wound us up. Hey, a couple of things, mate.
Yes.
Escape from the City.
Yes, your new show.
New show in full flight.
Yes.
Just a little shout out, Ben. So here's the deal. If anyone wants to come on, I'll rewind just even a little bit before that.
Yeah.
If someone's thinking that they want to escape the city, Ben, Perth to Margaret River, Adelaide to the Barossa Valley, Melbourne to Geelong, Sydney to where Ben, Blue Mountains, anywhere. If you're just thinking you want to get out of the rat race and you're thinking of moving, here's what we'll do, Ben.
What's that?
We'll guide you through the process, number 1. 2, we'll fly you to the location at our expense. 3, you'll have your journey documented to just a few people will see it. So when you move,
national audience.
when you move, you can actually, once you've settled in, you can hit rewind and watch the whole journey again. So it's documented forever. And 3, you can allow the rest of Australia to enjoy the journey with probably a glass of red at the end of a long day. So if you are interested,
so it's a shout out and getting on the show.
Yep. There's a few spots left, Ben, not many.
For this year?
For this year.
Yep.
So if any of the listeners want to get involved, we are going to put a link in the show notes. We're going to put a link on our Facebook page, Ben. Just click the link, follow the bouncing ball, come on. I would love to meet you. I would absolutely love to meet you. But there's only a very limited window left, Ben.
Okay.
So I thought I'd shout out the producers.
That's great.
Said to me, the window is closing, so if anyone wants to do it. So if that's you, folks,
Thinking about a sea change
Sea
or a
change,
green change?
tree change,
Tree
green change,
green change?
any change from the city, we want to hear from you.
Cool.
So reach out to us. Ben, this week the RBA announced the most anticipated news.
You don't know how hard it is that every month
You do well.
And I've got to, what is it now? It's the 21st consecutive month of no change.
Yeah.
And it's probably not going to change until the end of next year.
And you don't have long to do it because you get that message out bang on at 2:30. And so you've got to quickly get that done, sort of 2:27-ish.
Oh, that's not true. I do it the day
Live.
before, let's be honest.
Live, mate. It's live. I watch it. I've been
And
in
all
live.
the time I've been doing it, there's only been one time where I got it wrong.
Yeah.
It's wait.
So,
Does the announcer go out at 2:30?
oh, you spoiled it for me. I watch those straight away thinking I can't get you for the next 6 minutes because you're shooting that live. So, but here's the reason I'm bringing this up, Ben.
Sure.
Because you made a prediction. And I think some heavy hitters watched it.
Yeah,
I think they watched it, and then they've implemented your advice, which was?
Well, it's just that there's no doubt that with, when you have commissions like the Royal Commission, you've got compliance, you've got potential litigation, you've got pressure on process and, more cost coming into the system, rates are going to go up. I mean, what we have to pay as a courtesy of these types of reviews is it normally costs more to run compliances inside banks, and those costs get passed on because I'm sure the shareholders of the banks aren't going to sit back and say, "Yep, we'll
Let's
take it
absorb
all."
it. Yep.
There's got to be a balance there, but that's what's going to happen.
So you called it first, mate. So every time someone sort of mentions that, it needs to hashtag me too because it was you first, and you just wanted to let everyone know that you got that information out there.
The
before
governor,
else.
Philip Lowe, he basically said today or yesterday when that it's likely that there will be a cost that passes on. So I'm also saying, and that's the message if you haven't seen any of my videos of late, the only reason why we haven't seen the banks actually move outside of the cash rate cycle because their cost of funds in terms of US bonds, and I mentioned this to Alan Oster when we spoke to him last week, and he was a little bit more on the fence about 70% of the funds come from Australia, 30% come offshore, but that's the big four banks. But some of the other lenders where they get the vast majority of their funds offshore, those costs are going up. So the monetary markets are moving a little bit based on potential trade wars and a few other things. So there's a little bit of cost that's flowing through in terms of risk that's flowing through to wholesale funds, and that just means that we might see interest rates, even though the cash rate might stay on hold until the end of next year. Then we still might see out of cycle rate rises, but you wouldn't do it now.
No.
You'd be ludicrous if you were a bank.
Failed the Herald Sun test, the Courier Mail test, the Sydney Morning Herald test.
The pub test.
Yes.
Yeah, the PR test.
Miserably. So.
Yes.
All right, good insights. We got the band back together this week, Ben. I was on Sky News on Tuesday night with Ronnie.
The Market.
The Market. So if you want to go and check that out, I think I was going to put that up on Facebook. Talked about Perth.
Yes.
I
watched it.
Did you watch it?
Yeah, I watched it.
Oh, yeah, you had nothing better to do.
Well, it was the first time you're on the market, so I wanted to see how you go.
That's right, to see if I could...
You did well. We'll move on. What are we talking about today?
No, we've got a few more housekeepers, mate. Just cool your jets.
People
cool your
put
jets.
it on times two.
Cool your jets.
Until we get to until we get to the good stuff.
Oh, mate. There's a stitch up coming up in a couple of weeks from that comment now.
Right, yeah.
TPC Live, Ben.
Yep.
Coming up in Sydney in June. So we're going to give an opportunity for our Sydney-based listeners to come into a room with us. We're going to record it live. We're going to have a fantastic guest
Property
on
Couch
that.
Live.
Property Couch Live. So keep that in mind. In June, we'll keep you posted. And we are in the thick of writing a book right now, Ben. So I want to do a shout out to our listeners, to the listeners who have actually downloaded our Money Smarts.
Yeah.
And for those people who have downloaded the Money Smarts and they've actually had transformation in their money life, we want to hear from you. If you could reach out to info@theproperty couch, because we're going to include people in our book, Ben. So if you're happy to be a part of that, the anecdotes of what you've done, we want to know how it's transformed people's lives. So if that's you, because we know that some people have reached out to us on Facebook, they've reached out to us on our website, Ben. If you're comfortable being involved in our book, send us a note. We want to absolutely hear from you. And part of that, Ben, we're going to have these little breakouts. We want money hacks. So the Money Smarts is about keeping as much money as you can in offset. So if you've got a little hack that you've got that maximises the amount of money that's sitting in your offset account, we want to hear from you. We will feature it in our book, we absolutely want to make it the people's book, Ben. So it's transformational for everyone who reads it.
Now we've got a name for the book, Bryce.
Yes.
But I've got also a little bit of fun. Like if you come up with a funny name or a really good name for the book, now we've got our name, then I reckon we should give away a free book when it's out.
Okay.
Like just to have a bit of fun, and we'll read a few of them out in terms of what would you name a book about money management, personal financial management, money management. I'd love to hear what those, what creative people can think about.
I'd love to hear it too.
So any good ones, we'll read them out.
So send them in any way you like. Ivis and Em will collate those, and then the ones that read out, Ben, or everyone?
Oh no, the ones that we read out are probably definitely going to get a book.
Yep.
But have a go.
Have a go, have a crack, see what I like.
See, and if one of them gets it completely right, we'll give you 10 copies.
So, Ivis decided. So Jeremy just sat down because he's thinking, you stood up for the next one.
Oh, you're still here. Oh, sorry.
Okay, so here we go.
All right.
Mindset minute. Now this is actually going to take a minute.
Back to 1.5 now.
Back to 1.5. So I was recently in America, Ben.
Yes, you were.
And the last time I was in America, I bought a gift for my wife, and I accidentally left it behind, right? So it was sitting, when you got all the stuff that's in the hotel room, sitting down by the thing on the next to the television. Yep. When I packed it, I didn't pack it right. So I come back to Australia.
That's the story you told me.
So I come home, I tell all the kids what they got, and then I say to Andrea, honey, let me tell you a story. And then it's right up there with the dog took my homework, right? Because it's either true or it's not true.
Don't tell me it happened again.
It's absolutely true, right? That I did buy it, but I left it behind. And so...
You're going to share what it was that you bought?
I bought clothes, right?
Oh,
so,
okay.
So I was
a big item to leave behind.
Pardon me talking while you're interrupting. Sorry. So people are on times 2 at this point, mate, so I've got to get through this.
All right, quick.
So this time when I'm there, I'm feeling like under enormous pressure. I've got the kids lined up, go and get the Lego, go and get the bobblehead things, the superheroes, they love it. But with Andrew, it's a bit of pressure. Yep. Right? And as you know, I fly a day early so I can get into the time zone. And so I've caught an Uber out to this factory outlet, and I'm cutting laps and I'm thinking, what can I get? And I walk past Victoria's Secret, right? Now, before everyone sort of starts to squirm in their seat and think this is going to go R8, it's not. I'm going in there looking for something very tasteful, right? Nothing inappropriate. So let's just clear that up, right? Very, very sort of PGM, not R, right? But I don't know if have you guys ever been into a Victoria's Secret? Well, this could be. Don't answer.
We're never going to admit to that.
Well, that's my point, right? So I'm walking past thinking this is a great idea to go and get some for Andrew, but to actually walk in on my own. That's actually not that easy to do.
No.
So I've gone to walk in and then I thought, no, this is stupid, right? How am I going to walk into this on my own? And so I walk past it and I go up. And then I start to think to myself, no, well, I've got to get something that's meaningful here. So what do? I turn around, I walk past it again. But the same feeling came up. I just feel it's inappropriate. I just didn't feel like it was right. So I walk past it again. I thought, stuff it. So I go, I'm going to go find something else. And then I start to go, well, no, this is now a mental game. I've got to play the mental game here because... what I did is I turned around and I came back and there was a chair out the front of the store. So I sat on the chair and I just watched and I thought, this will help me. I'll sit here, I'll watch all the guys going in, and once I see another guy go in, that'll give me courage and I'll go in. So what happens? No other guys have gone through, right? Just girls. So I'm thinking that's confirmation I shouldn't do this. So I walk off again. Right? Oh. And then I'm starting to get really frustrated because I go, I do not want to let this mentally beat me now, right? So the story goes on a bit longer, but
everyone's getting a bit of an insight into how your mind works.
Correct, yeah. I've got to win the mental game, right? So I come back and I'd have a plan, right? And I'm thinking, take a deep breath. I see a picture at the front. This woman's got active wear on. I'm thinking, going to go straight up to the person. I'm going to talk to them about the active wear. That's my, so I don't feel like a deviant. I go and that's what I do. I walk right to the back of the store. It's a really deep store. I walk around. No one approaches me. No one talks to me. So I walked out again. I walked out again. And then by this time I'm steaming. I'm like, I am not going to lose this, right? So I turn around. I walked in. I go, right. This is it. It's going to happen. So I walk in, I walk straight up to the assistant, and I did what every bloke would do in this situation. I pull out a text message saying, my wife wanted me to do something here just so that I can really say that wasn't, that I'm here for a purpose. She helped me, I got it done, walked out, got home. Andrea really loved what I bought her, right?
Wow.
So what's the moral of the story, Ben?
I'm waiting for it.
30 seconds of courage is all it takes, right? Because when you think about a courageous person, they're not courageous 24/7, Ben. They have just got little pockets of 30 seconds where they've decided to be courageous and they will get through. So my mindset 4 minutes of this, my mindset 4 minutes today is 30 seconds can change your life. Now,
love it.
Buying a gift for Andrea obviously planted a seed into my marriage. Didn't have transformational benefits for everyone, but the idea was
you left it behind.
I got it home.
Good.
She loved it. It was great.
Brilliant.
But 30 seconds of courage is all you need, Jezza. So there we go. Aren't you glad you waited for that? You can sit on it. All right, so today, we are talking all things research, man.
We are. Yep.
And
data diving today.
No better than Jeremy Sheppard, who eats, sleeps and breathes data and capital growth. So we wanted to talk
king.
We want to talk about a couple of things today, but first of all, Jeremy, we get lots of people write into us with questions around research, and we thought we'd throw a couple of quick ones at you, just so that we can get your minute on it, or as I've demonstrated, it can go up to 4 minutes. So first couple here are kind of related, but in terms of capital growth, how many schools and parks in an area, how far from transport, and how much or how little does housing commission in an area affect? So start anywhere you like, schools, parks, housing commissions.
Yeah, well, they're all actually the same. Obviously you want to be away from sore points and close to the amenities. The thing is, as investors, we're after capital growth. So we're not the tenant making a decision about where they want to live in the suburb. We're looking for some superior capital growth. And if those amenities or sore points have been there for 20 years, they've already been fully factored into the price of properties. So you're not going to see accelerated growth simply because you're close to all the schools, all those amenities, the parks, the shops. It's if there's a new shopping centre, new parks, new school, or change in school zoning, a reduction in housing commission, new train line. It's changes that are important. It's not how close you are to these amenities, it's how long those amenities have been there.
So the change in amenity makes sense, doesn't it? When you think about it.
And the housing commission one's interesting, isn't it? Because you can straight away form a view around that. But if you think about some of the best performing suburbs in Melbourne, for example, Albert
even
Park,
in Sydney,
South,
where the housing commission shift.
Well, in Albert Park, South Melbourne, Prahran,
what
else been? South Yarra, they've got housing commission, big blocks, Richmond.
50s, 60s builds.
But it hasn't necessarily impacted the suburb overall, but it does.
That's right.
Impact
if it's been there for a long time, it's almost irrelevant.
They're really good case studies. I think we've spoken about this before because they are ingrained, and the outcomes of the people who live there, who are mixing with the more affluent and the more socially connected people, you see good results. It's when you have experiments like Macquarie Fields, where you put all of the lower socio-demographic to there, and the culture set is one of dependency and entitlement, that you get these big challenges around that, and obviously, terribly poor capital growth returns and societies or clusters of ghettos and zones that no one wants to go in, are scared, drug scenes, the whole bit. So,
but eventually all those factors will be included in the price.
Correct.
And people will be accustomed to that stigma, and eventually that stigma disappears, and then you see some ridiculous capital growth.
Yeah. So long as the behaviour of those people, we all still want safety and security. How do you rate safety and security in your numbers?
Yeah, well, obviously you would speak to a real estate agent about getting the best tenant in the property. You obviously don't want someone who's got a poor track record. My approach would be you ask the property manager what's sort of typical for this area, and then knock off 5% or something, and say I just want a lot of people through the open inspection, and then you pick from a bigger pool the best tenant with the longest history of good rent, and then you've resolved that problem.
You'll drive down the street, in some of these really low socio-demographic areas, and if you're seeing cars up on blocks and bricks and just the deterioration and just the no love of the street, you're not even going to probably put your name on an application, nor are you going to be thinking, I'll buy that. It still may get some great capital growth, but I would still steer clear of that for me, because the headaches of it mightn't be your tenant. It might be the meth lab next door, or the red light district of this street, or whatever. People coming and going at all hours, music at all hours. That amenity, that sort of comfort of living in that location, can cause you headaches if you can't retain good tenants because of your neighbours.
I was filming on the Sunshine Coast recently in a suburb called Bly, and the agent went to considerable lengths to let me know that he had plenty of police clients in the suburb. And I said to him, so that's significant for you, right? And he goes, yeah, because I've spoken to all of them and asked them why there's such a concentration of police in this particular suburb. And they go, because we don't have any clients in this suburb.
They call them clients.
Yeah. Well, tongue in cheek. So the crime was down.
Yeah.
Hey, another one here, Jezza, is how do you find the small pockets in suburbs that are the most desired?
Right. Well, yeah. My view on this might be a little controversial because the kind of markets I'd be recommending investors buy in are the kind of markets where you just can't be choosy like that. The suburb itself is going to do some tremendous capital growth if demand exceeds supply. You're not going to be able to negotiate a good deal. You are going to have to suck it up and pay what's
fair
due.
Market price.
And fair market price, maybe even a little over, just to get into a hot market. The little areas, they might have some superior growth for a short period of time, but eventually, like I said with that other issue, they get factored into the price of property. It's the suburb that does the heavy lifting. Mm-hmm. So I wouldn't fuss so much about it, but you can always ask real estate agents, and you guys have got some ideas where you go, don't you, Bryce, for picking those pockets?
We've built an in-house tool that allows us to pull some data from ABS. So I get dropped into suburbs all the time, Ben.
Yep.
Sometimes the ones that I'm not familiar with for the show.
Yep.
So I quickly work out where the better areas are just based on income profiles, because human nature is if I've got more money, I'll gravitate to the ones with the better views or the better spots. And so that helps me condense research down very, very quickly because I've got to be across a lot of suburbs. So for me, that's how I find the little micro markets within the suburb.
And I think what's also, who was that question from? Because it's a really good question.
It's a good question from
Paul
Jane.
Or Jane.
Yeah.
So the other thing that we would focus on is you might have the best streets in the area, but you could still pick the eyes out of the worst property in a good area, because what we're saying is, remember, we say 80% of the return comes from the location, 20% from the property. So if you can buy a property that's in original condition that you can add value to, there's uplift in terms of adding value there as well. So if you're not in the very best street, but the overall pocket is offering good amenity and good lifestyle and human interest and human behaviour appeal, then you can even get an X factor in terms of adding value to improve that return.
Mm-hmm. Yeah, the best street, from my perspective as an investor, is the one that's going to deliver the most amount of rental income, the most amount of capital growth for the least amount of risk. And that might not be the best street to live
suburb.
in. Yeah.
Yep. Good point.
Like it.
Very good.
So, mate, the next thing we want to find out is what have you been cooking up in your lab, mate? You're always looking for new ways to dissect.
Capital Growth Lab.
Capital Growth Lab.
Right, yeah.
So I know that you've been working on a few sort of ideas, which you're still forming and you're still getting granular on. But it'd be nice to share with the couches just some of the early stage thinking that you've got in calculating capital growth.
Well, obviously, in reviewing things like our algorithms to pick growth locations, they can only be tested by their capital growth performance. So how do you measure capital growth? Well, the traditional way is change in median. But you get all sorts of problems with the change in median, particularly where there's heavy development activity. New houses are obviously more expensive than old houses in the same suburb. So you get a large amount of developer activity and it looks like the median's gone up because it's just shifted towards the sales of new properties. So there's all these sorts of anomalies in how you calculate capital growth, and so we've been looking at ways in which we can improve that calculation. And so we've looked at about 4 or 5 different methods. Obviously we use the change in median, but that's like the baseline. We want to improve on that. So we're doing things.
Can I just add to like a couple of things with median? It's so standard sort of used, but what if you're in a suburb where a developer drops a heap of one-bedders on the market? That's going to drop the median down. Or what if the property was a paddock prior then it's been cut up into subdivisions. So the median looks extraordinarily high.
That's right,
they're the anomalies that doesn't explain, doesn't it?
Yeah, so you've got to look at things like the attributes of the property. So it might include the block size, the number of bedrooms, number of bathrooms, number of parking spaces, the internal floor space. All those sorts of things can be used to come up with a more accurate valuation of a property, and then you can look at all the property valuations for a particular month and get a better idea of the change in capital growth. So that's more a predictive analytics. That's just a form of a field of mathematics that's used to try and come up with a more accurate figure. Other methods we've got are repeat sales. So we look at the same property but its transactions over the years to try and calculate capital growth. You do that for a large number of properties. You've got to some more fancy maths, interpolate and extrapolate.
Ooh, big words.
But repeat sales method is one method. Then you've got the line of best fit, where you grab a whole bunch of values of medians along a period of time, and then you try and plot a line of best fit, which has the minimum distance from each one of those points, and then you calculate the gradient of the line. That's the
How
slope.
do you do that? Like, can someone do that without a sort of, a bit of techo background like you? Is that for the faint-hearted or not?
No. We're really getting into some technical stuff here.
Yeah.
There are a couple other methods that we're looking at. There was one that I was playing with not so long ago. I've decided to scrap that because it just didn't prove to be all that effective. But trying to measure capital growth is really just an opinion. There is no right or wrong answer. It's just a bunch of opinions. And the idea with an algorithm location score is we're getting multiple opinions about supply and demand, and that's the approach we're taking with capital growth calculations. Get multiple opinions, and it's a bit like crowd intelligence. If you have a large number of people all having a guess, the average might be quite accurate.
So, I was with a client earlier this week, and he asked the question, so we use median, but why don't we use averages? Like, pretty simplistic of example, and it's easy to solve, because it's like, well, what if we had 20 properties sold at $500,000 each, and then we had one property sold for $2.5 million?
Yeah.
That skews the average. And so that's why we take the median. So there's still...
And even another analogy, the three of us are in a bar having a drink, and Bill Gates walks in, it's the fourth person to have a drink with us. On average, we're all billionaires.
Yeah, perfect example. So that's why we don't use averages as well. So we're talking about, obviously, median, hedonic index, repeat sales, clusters, line of best fit. So that's what we're playing around with in the labs. And there's pros and cons with each of those.
All towards trying to calculate a more accurate capital growth.
Yep. And we're using, obviously, people like data scientists a data scientist is basically the new age name for a very, very clever maths person who can also move around things like R. If you don't know, for those people who are in tech or programming, R is a computer language that is very, very good at mathematics. You've got C+, you've got all of these other, you've got Python, you've got all these different types of technical...
Mate. Hey, riffing it off over there, hey?
Well, I need to know what's... Well, we're on a pursuit here, Bryce. You know our mission.
Yep.
Our mission is to find research, but also to try and get the best results that we possibly can. And technology is going to help in that play in terms of into the future where we talk about machine learning.
I mean, the landscape will just be completely different in, maybe it's 5-10 years from now, maybe it's only 3, but I can picture a future where it's just look up. It's not research. Yeah. It's not research that takes days. It's literally a couple of minutes. Yeah. Here's my budget. Here's my serviceability limitations. Where should I be buying? And you just look it up.
Wow. There we go. That's the future that we're looking at. Pretty exciting stuff. You just got to get it right. I mean, there'll be people who have these, we've seen a lot of people spend a fair bit of money in this sort of space, but there's a fair bit going on. And so you've got to get the best minds in the room to try and solve the problem. And so that's pretty exciting.
So when that's fully formulated out of the Capital Growth Lab, mate, we'll do a full episode on it. But good to see that our listeners get a bit of an idea of where your thinking's going. And another great thing that's come out of the lab, Ben, is
let me explain it to you, Bryce, because it's something that we're excited about. So some of the feedback we've got from our subscribers on Location Score is we'd love to see a little bit more history of how the area's been going. And so we've sort of taken that on board, and we're pleased to announce today that there's a new feature inside locationscore.com.au, and it's called SUA Tracker. Now, SUA stands for Significant Urban Area, and we'll explain that more in a little bit of a minute. And that significant urban area is basically the biggest cities from top to bottom, okay, in terms of what we're sort of looking at. Now, the definition of that is an area that's a population of at least 10,000 with a core centre population of at least 7,000. So if you think about that, it's got to have a township or a city, a central business area that has at least 7,000 people in it, but overall inside the geographical area, it's got to house at least 10,000 people. So that's what a significant urban area is. And we talk about where would we spend our money across Australia. There's obviously all of these urban areas, and I'll tell you how many there are in my Did You Know?
Well, I like it, Ben. Hey, what's the science behind creating a boundary around the urban area? Has the ABS released that, or is it just it is what it is?
Yeah, the ABS has all the details. They'll give you a list, the population.
But is it a certain number of houses? Is it a certain land mass? Is it different across them all?
Yeah, that's a good question, actually, how they decide.
So what happens is there's the Australian Geospatial...
Expo, you were at it.
Yeah, not the expo, but there's a guideline.
Yep.
Right? And so inside those guidelines and how we make determinations of different types of communities and profiles and demographics and so forth, is we have these different layers. So we go from SUA, significant urban area, and then we've got SUA 4 or
SA4,
SA4, SA3, SA2, SA1, and they are just different combinations or different penetrations of that data. So it's just basically saying we're putting this artificial boundary around this different area, and that'll give us insights into that cluster of people. Fair to say?
Yeah, it's an ABS defined.
It's an Australian guideline. It's an Australian guide, and they have different ways in which they cut that data. So you can also still cut the data in terms of state boundaries and obviously national boundaries and those and suburb, local government area boundaries. This is just one of those interpretations in terms of what that looks like. So
tell us more.
Well, what we've done is this week we've released a new report which is available. This is the scoop for our listeners. So you will get what's called the Property Market Swingers Report, Bryce.
Wow.
The Market Swingers Report. Now, the Market Swingers Report is just a way of sort of saying what is broadly happening in that particular marketplace, isn't it, Jeremy? Let's talk about the theory behind what we're talking about here.
Yeah, so what we're doing is looking at the average location score. So we aggregate this location score for all the suburbs within the significant urban area. So you've got hundreds of them in Sydney, and then we just chart that to see how it's been swinging over the last 3 years. And of course, Sydney, we all know, has been cooling off. And so back in, it was mid-2015, Sydney had a location score, an average location score of around 73. That's very good. And now it's down to 60, which is just above balanced, which makes sense because we all know that it's been cooling off. So that slide, that swing is what this report is all about. And we've done that with all these significant urban areas. Sydney is the biggest significant urban area.
So you're tracking the market in terms of its location score. What about the market spread?
Yeah, so there's another chart there which just shows the breakdown of the number of suburbs that are in different categories. So we split up the location scores into 5 different categories. We've got excellent, good, maybe, caution, and danger. Obviously you don't want to be in the danger. You probably want to avoid the caution areas too. So we want to know what percentage of all the markets in a significant urban area are within a particular category. And what we've noticed in Sydney is that about 3 years ago, something like 20% of all markets were considered excellent according to location score, and now there are none. So there are still good markets, but just not excellent.
Now, I know the listeners can't see this, Ben, but they will have access to it. But when you have a look at that market spread, it's interesting to see the pattern that's forming in terms of the maybes starting to grow as a percentage. And as Jeremy said, the excellents have just dropped off the radar. It's a really great...
what it shows is Sydney is moving back into equilibrium.
Yeah.
And so and here's an example. So in March 2018, we had 323 good suburb scores, right? Back in March of 2000, so the year before, there was 415 good suburbs. So you can see that it is cooling off, and that market spread is a real good indicator to sort of say that, you know, there's virtually no excellent suburbs in the Sydney region at the moment. And so that sort of trend line through the market spread, where we're seeing more caution suburbs, more maybe suburbs, bringing back into equilibrium, is just basically showing that the market's cooling off as it should be. You know, so when we go to other examples, I mean, what's another example here where we look at, say, Perth as an example, because everyone is starting to talk up Perth. You know, and it's showing us, you know, in general, it's in a balanced market where we've got some maybe the vast majority of our properties are in equilibrium over there. We're not seeing that moving into good yet. So you might get into Perth at the bottom of the market, and that's fair, but it could be the bottom of the market for 5 years, couldn't it, Jeremy?
Yeah, you don't know how long it's going to take. In fact, I was reading some research, probably closer to marketing, by a developer who's trying to flog off some stock in Perth, and they came up with some very interesting stats to try and pump up the Perth market. But really, it's just in equilibrium now. There's a balance of supply and demand. It's bottomed out, but that doesn't mean that capital growth is about to jump up.
And you make a good point, because we were talking about that in terms of, you know, Jeremy and I catch up once a week and we talk about what's happening in the market, get some research. We've got our investment committee meetings where we talk about markets that we're looking at, and that particular bit of it is marketing. Let's make you know, that's all it is. They were talking about population, weren't they, Jeremy?
It was kind of peculiar, because they were saying that Perth's population growth has been tracking at 2% per annum for the last 5 years. And I looked that up, checked it, and yes, that was true. You go back 5 years, and the population growth rate for 2012 to 2013 was 3.5%. Then it came down to 2.5%. Then it came down to 1.6%, 1.3%, and to June 2017 it was only 1%. But what they were doing is comparing 2%, the average over 5 years, against the national average growth rate, which looks quite appealing. But they didn't mention that it is declining and it's come down to 1%, which is quite ugly. So it's just a way in which you can make the statistics tell a different story.
We were talking about averages before. That is a classic case of how averaging that out makes the marketing story better, but it's actually a cooling market. You know, the population is growing over there. That's a positive, but it wasn't growing at the heady rates that it was previously when we saw the capital growth in that market. So you would then want to get some confidence to know that the supply and demand is going to be, or supply is going to be restricted and demand's going to, you know, exceed that. So you could be sitting in this market like people who bought in Hobart in 2014 might be sort of putting their, you know, we picked the market. Well, no. In 2014, 2015, you should have been in Sydney. We all should have been in Sydney. I put our hand up. We got out of Sydney too early. We were in 14, but we got out in 15. That's a classic case of, if I'd have gone in there, I'd missed that opportunity cost. And so when to get into those markets is when you actually start to see some signs, because you could be sitting on something for 5 years that's not moving. And I'd much prefer to be, you know, investing my capital into a location that is on the move, as opposed to, you know, so we want to see more confidence. Don't get us wrong, we will be in Perth at some point, but we all want to see, you know, more confidence in that.
Well, Alan Oster said it last week, Ben. He said there's vacancies in the CBD above 20%, so there's still issues around retail, around job security, and he goes, the sentiment change in Perth it's definitely been positive, first time in 4 years, but what he meant is it stopped falling and now it's now gone flat.
And we know some of the better suburbs over there are doing all right because there's confidence in the...
Absolutely. Yeah. So if you're playing the long game and your retirement isn't in the next 10 years, you can go and pick up some terrific stuff in Perth, because they're fourth most populated city in Australia, but they tip to go third, beat Brisbane in the next 20 years. So there's population moving there, which is good. But if you have got a short-term horizon...
What else did you
play? Well, they also mentioned that unemployment at January last year was 6.7% and had come down to 5.7% by the year end. So now they're focusing on the trend, But the end figure is still pretty ugly.
Well, the national is 5.5, so they're still above national at 5.7, and there's still a lot of underemployment in that location.
Yeah, and again, they pointed out vacancy rates. They've come down to a figure that's still well above most other capital cities, but they're pointing towards the trend. They're not pointing towards the end figure. So they're choosing when to say, here's the average over 5 years, when to choose to talk about the trend, and it's all just biased research.
So we're thinking about, when my little segment called Calling Bulldust.
Yeah.
Well,
I haven't had it for a while.
Well, no, but this was a little bit of. So we're going to get Jeremy in every, once a month to call a bit of bulldust on some of this marketing stuff that's out there, to sort of say the facts, the true facts, because we can all make numbers do different things. The true facts don't necessarily support
yeah,
it.
another interesting one. They talked about $17 billion worth of mining projects are scheduled to start in the next 3 years. And that sounds massive. That sounds like a huge job boost. But just to put that in perspective, Gladstone, a city of less than 50,000, in the peak of the mining boom, had something like $80 billion worth of projects. And we're talking about Perth, which has a population of 2 million, and they've picked out 17 billion. So massive difference there. That'll have virtually no impact on property prices, but they just pick it out and hope that consumers will swallow all that BS and buy into their project.
Yeah, and look, that's their job. I mean, ultimately their job is to get their project sold, and they're in the business of making money. Our job, in terms of what we do with this podcast, is to basically shine a light on research, call out what is true research and what the fundamentals need to say, and we will continue to do that. And that's effectively what we talk about with our Swingers report. This property market Swingers report is free to our listeners, free to those people who get on the site and basically download it. And you're going to see, not only have we got the top 20 significant urban areas, so basically our top 20 cities that are part of that story, we've also got a little blurb on some of the markets that are looking really strong. So the suburbs within those locations to make more investigations on, to do your field research, but these are suburbs that are showing really, really good or excellent location score figures, and that is free, Bryce. It's absolutely free.
Propertycouch.com.au is where they can get it from. All they have to do is download it, and they can get access to it. Hey, I was on the ABS feed on my Facebook. They did a little infographic.
Yes.
It's June 2017, so it'd be nice to see it June 2018. Perth, 2.04 million. This is just the city of Perth, 2.04 million. Darwin, 150,000. Adelaide, 1.33 million. Melbourne, 4.85 million. Sydney, 5.13 million. Brisbane, 2.4 million. Hobart, 230,000. And Canberra, 400,000. So interesting to see what that will look like sort of in the next 10, 15 years. What else do we want to focus on this report, gents?
Well, just on that point, Bryce, I was just going through the numbers here. These are the areas that are bigger than Darwin. Are you ready? Like here's, I'm just flicking through. Tweed Heads, Gold Coast Tweed Heads is obviously bigger than Darwin. Newcastle is bigger than Darwin. Canberra is obviously bigger than Darwin. Sunshine Coast is bigger than Darwin. Central Coast is bigger than Darwin. Geelong is bigger than Darwin. Wollongong is bigger than Darwin. But what's also interesting, Hobart, all of those other cities that I just mentioned, Hobart comes in then. Now that's a capital of one of our states, and that's way down the list, like Wollongong, Geelong, all of those areas are actually even bigger than the Hobart market. And then we go Cairns, and then we go Ballarat, then we go Townsville, then we go Toowoomba, Bendigo, then Darwin. And then after Darwin is Albury-Wodonga. So everyone sort of looks at Darwin and says, okay, it's a capital. Now, I love the incomes up there. I do love the fact that there's a lot of medical and a lot of service industry up there. But, the market is also not strong at the moment, so don't put your money there. It's opportunity cost of where we're putting that capital. Anything else you want to talk about, Jetta?
Well, I just noticed that Brisbane's location score has just trended down slightly over the last 3 years, and is still tracking a little bit behind Adelaide, and yet most of the talk is of Brisbane. There are still some good markets there, But it's just interesting that Adelaide is still just edging out Brisbane in general terms.
Yeah, in an aggregate term.
Yeah.
But that's we've talked about Adelaide. We like Adelaide. We're buying in Adelaide. We're buying in Queensland, southeast Queensland. So they are definitely really, really strong markets to be looking at. So, I want to just, make a highlight that if you're interested in learning more about this, download this Market Swingers report. It's free. It's available both on the Property Couch website and also locationscore.com.au. Now, if you are a subscriber, this is where it gets even better, because this is the top 20, Bryce. But subscribers of Location Score, and this is going to come out maybe twice a year, right? Location Score subscribers get the top 50 every month. Every month.
Jeez, that's bad.
So that is an important point. So we're going to open up the opportunity to have another look at locationscore.com.au with a special price. So we're going to give 20% off the 3-month subscription.
Yep.
So 20% off the 3-month subscription by using the code
TPC20, Ben.
Just simple, TPC20.
TPC20. So existing subscribers will get that, Ben. New subscribers will get that. So there's a couple of opportunities for people. Well, there's 3 opportunities. 1, go and download this report for free now. 2, if you want to check out your suburb, Ben, go to locationscore.com.au, put your suburb in, you'll find out what your location score is straight away.
Free.
3, go and subscribe so that you're getting this data monthly, weekly, in demand, whenever you like, Ben, in terms of the location score. And of course, monthly, you will get that Market Swingers report. And use the code TPC20 to get a 20% discount off that.
Regional markets. There's been a lot of talk about some of the regional markets, and that's where the new growth will be, because obviously we've heard about the city markets cooling. CoreLogic brought their data out this week, again, consistent with a cooling market. So we want to get Jeremy's view in regards to what's happening in some of the regional markets and some views on those.
Yeah, well, definitely one regional market that's got my attention is Geelong. It's the second highest scoring significant urban area in the country. It finished off March 2018 with a location score of 66, which is in the good range. Yeah. And you've got some excellent markets in there too. Obviously just a stone's throw from Melbourne, so people can commute. But that's impressive. It came in behind Hobart. So it's really Hobart, Geelong and Melbourne are the top 3 significant urban areas around the country. So
a comment on Melbourne, like everyone's getting off the bandwagon of Sydney and Melbourne, but...
Yeah, I don't think that that's a good idea. If you were in 2 minds about buying in Melbourne, I'd follow through on it, because I'm not seeing anything in the data to suggest that demand is easing off. It might be moving around to different areas, but it's still a consistently hot market.
But people are basing their views on aggregate data, because the auction clearance rate is actually coming down, which is interesting, because we missed 3 out of 3 auctions on Saturday. So the auction clearance rate as an aggregate is coming down, and yet it's still highly competitive in the properties that we're looking to buy for our clients. So interesting.
Mate, that's a great wrap. We'll obviously do it again next month in terms of looking at some of the data insights that we're seeing in the marketplace. But thank you very, very much for coming in. And if you find something to call bull dust on again next month around, just bring it to us.
A month will give me heaps of material.
Too much, you reckon? So always a pleasure to have you on, Jeremy. Thanks for that.
Yeah, thanks,
quick one. I'll make my life hack very quick, Ben.
Yep.
Kevin Lehman is a podcast I listen to. I've mentioned it before. It's a parenting podcast. He says, mate, in terms of getting your kids to do what you want to do, he quote him, there's parents all over America shouting at their kids and they're still not doing what they want. So we're using one of his techniques at the moment, Ben, where we give the kids 5 bonus points in the morning. When they first come out, they get 5 points. I put them up on the board in erasable markers and then we have 3 minutes, because we budget their screen time, right? So they can 3 minutes.
I was going to say, what's the 3 minutes for? Screen time. I love it.
And it's absolutely working. We've been doing it for the last week, because they come in and they don't, because if I go and rub it off, they've just seen their screen time go down. So they can earn 15 minutes in the morning and so the theory is, I say to them, hey, mum's asked you to do the dishwasher. Yeah. If I ask her to hear you do it again, lose a point. Mum's asked you to put your clothes on. Dad's asked you to go and brush your teeth. If we have to repeat it twice, they lose a point. Now, day one, they lost a few points, Ben.
As you do.
But they protect those points like you would not believe right now. So we've got.
I love it.
We're on a winner at the moment. So
we do the you can't, no screen time until you've put your school uniform on, brush your teeth and all the things. And then they're like, so they can't do it until their mum's giving them an inspection. Yeah. And they stand there like, everything done, hair's in the right way. Okay, there you go. But I'm loving that.
And Andrew's budgeted that they can have screen time.
It's three times I've got to talk to my boys.
Yeah.
Every time.
Yeah. So,
Harry.
So they earn them, Ben. So I said to Andrew, because she lets them do it every second day, right, for 30 minutes, right? Yeah. So I said, instead of giving it to them, get them to earn it.
Great.
And so there we go, folks, for all the parents out there. I don't pretend in any shape, form, or that I'm the parent of the year. Don't worry about that.
Hey, I'm the yeller.
In fact, I gave my wife the application for husband of the year. She screwed up in the corner. I've been away for the last 5 weeks. So I won't win husband of the year this year, but there's something that's working for us. So if you've got kids, check it out. Did you know?
Did you know? Well, given that we're talking about significant urban areas, I thought I'd share with everyone exactly how many significant urban areas there are in Australia. Now remember, that means it's a cluster of 10,000 or more, and it must have a core centre of 7,000. Mm-hmm. There are, across Australia, 101 of these cities/towns.
Wow.
There you go. Across Australia, 101.
101. So
now that's going to grow as population grows, but 101 across Australia.
Very good. I did not know that. Did you know that, Jez?
Yeah, actually I did.
It makes sense that you would, wouldn't it?
In fact, I walked into to the Capital Growth Lab, and I said, Alex, how many significant urban areas? And I thought he'd have to just look it up. He just says 101. I said, where did you pull that straight off the top of your head? He goes, I looked at it yesterday. I remembered it.
There's a fair bit happening in that lab. So
there is.
So if you want access to the 20 most significant areas, Ben, go and download the report now.
Yep.
If you want access to the 50 on a regular basis, go and subscribe to the Location Score. So, mate, it's been a great episode. Hopefully that's helped folks. Give us some feedback. We always want to hear that. We did a Facebook Live earlier in the week, Ivis, so if they want to check that out, that'll be on the Facebook page. And until next week, mate.
Knowledge is empowering, Bryce, but only if you act on it.
Well said. See you next week.